Now let's take a look at the bigger picture. Ed Siddell's with us, CEO and Chief Investment Advisor, EGSI Financial. Good to see you. How are you feeling about the markets today?
Well, you know what? Actually, I'm pretty positive this month, all the way through the election, especially after Powell's comments, where he kind of talked everyone off the ledge and basically said that they're probably not going to raise rates, and there's a good chance that they still may lower them, and that's really what the market wanted to hear. I don't agree with it, but I think that's really what the market wanted to hear.
So when you see what Powell's saying, right, obviously everybody was betting on a lot more rate cuts than what they got. What are you thinking now? One cut?
Yeah, I think the strategy that he's going to look at, I mean, they've already started to ease up on the tightening. I think they may do a round of easing before they lower rates, and they may lower them just one more time. I mean, it is an election year, and he's looking at his legacy. So really what needs to happen is they need to raise rates. I mean, we have to really look at the difference. Do we want to have some short-term pain in order to have some long-term gain, or vice versa? And right now, everyone's looking for that short-term gain, which is going to create pain for the long term.
What do you think about inflation? I mean, do you think inflation's really sticky the way we've seen in some of the last prints, or is something likely to change?
It is. I mean, we keep overspending. I think we're really in a stagflation mode, even though they're really not willing to recognize it. If you look at the consumer prices are going up, they readjusted the employment numbers for last year, so we have higher than expected unemployment. And really, this is stagflation. We've been in a silent recession for a long time, and we saw that. I mean, people on Main Street are feeling consumer confidence, really dipped down below 100. It was 97, well below expectations. So, people are really starting to feel the pressure. And I think inflation, if we don't do something about it now, it's going to be around for a while.
Right, understood. So what do you tell investors at this point now as an advisor, the chief investment advisor? And granted, we've seen some volatility and maybe some uncertainty too, but what do you tell them?
Yeah, we're going to continue to see volatility. For us, it's long term. We're really looking for those companies and those sectors that we think have a lot of room for growth. Those companies that have really strong balance sheets, and a lot of cash on hand. You also have to look at when things go bad. It's an opportunity. So looking for those good buys. They're out there, and just get a hold of them and hang on for the long term.
Yeah, understood. When you look at commodities, do you like dabbling in commodities? We've seen gold moving higher of late and oil pulling back. I'm wondering if you think there's opportunity in either of those.
I love hard assets. I really do. I really like commodities. They continue to outperform the S&P, on an annual basis. Even though there's been a little bit of a pullback in gold, I like gold. I really like silver. I think silver is undervalued. And oil. Again, we're getting ready to go into the summer driving season. Biden, the administration already said that they may dip into the oil reserves to keep prices low, but there's only so much that they can do, and eventually, oil's going to rise. So as the price of oil and gold goes down, I think it's a great opportunity. It's the same thing with silver.
Yeah. Thank you so much, Ed Siddell, EGSI. Glad you're with us. Thank you.